मेरी आवाज क्लियर है ना?
Yes, sir. Yes.
Okay. Tell me what I have discussed yesterday. Have you understood?
Yes, sir.
You have understood. Now we are coming in the next part. That means yesterday we have discussed the preparation of cost records, that is only for annexure B2, that means para B part 2, that is in manufacturing account, manufacturing or service unit B2, that is equivalent to profit and loss account. And roughly I told the different annexure company wise. Today we will go to deep and see how the final annexures of the company is being prepared. So without wasting my time and your time, I am just sharing my screen. Now I am quickly recapitulate yesterday's class. Otherwise you will not be understood. Now we are preparing the cost records. We have prepared the cost records of a electricity distribution company. Here the companies, as per company SAP, there are four trial balance. One is substation wise total, another is substation wise regional office expenses, regional accounts office expenses, that means administrative office expenses. Second is store expenses, third is medical expenses. And we have shown how the mapping has been done of the SAP code or financial code as per average cost statement heading. The heading is material cost, direct employee cost. You see, against that direct material cost, there are a number of codes which are actually chosen or mapped as per cost accounting standard of cash 7, that is employee cost. And as per that cost accounting standard and CRA 1 employee cost, this financial code or SAP code has been chosen and grouped according to the in the group under direct employee cost. Similarly, direct expenses also grouped like this on the basis of CRA 1 and cost accounting standard. Repair, consumables and stores, repairs and maintenance, like this. All the headings of CRA, all the headings of average cost statement, that is B2 or C2, has been grouped, mapped of the total trial balance. Now, after this heading, some apportionment should be done of the service cost, that means hospital, stores, RAO office, that is administrative office, at the regional level. These are to be apportioned on the suitable basis, and this is the basis: actual service provided, manpower, repair, maintenance, power received from generation. These are called cost drivers. The ratio on which the common cost is apportioning is called cost driver. Now, after apportionment, this RAO wise cost has been prepared, average cost statement. It is the same heading, and it is the difference total minus RAO of office expenses, store expenses, medical expenses. This is the only production unit head, that means service unit head. And with that, only apportionment of apportioned cost has been added here. So it declares that costing margin as per cost accountant of A cost center. Similarly, it is B cost center, C cost center, like this. This is as per average cost statement. Here, for reconciliation purpose, for correctness, for inbuilt checking purpose, indirect cost expenditure not considered in cost and income not considered in cost shown, so that trial total can be checked. This is the checking. This is the total margin and this is the trial total. This has to be reconciled. Now next step is prepare this statement, again mapping from FC grouping, and this income not considered and expenditure not considered as per cost accounting standard 24 has been prepared. Next, profit reconciliation. This profit is means margin as per cost accountants, income not considered, expenditure not considered, and total. And this is the profit as per audited accounts. Now, in this case, under absorption, over absorption is not there, or overvaluation, undervaluation of stock not there, because it is the electricity distribution cost. But in actual field, you will find these entries also. And what is the undervaluation and overvaluation of financial accounts? The stock, closing stock valuation and opening stock valuation, difference of stock variation in cost and in accounts. The difference should be reflected here. So this is the quickly recapitulation of the part which we have already discussed yesterday. Now I just keep it minimized and open this one. First, you have to see this is annexure A1, that means para A part 1. Here you have to see that corporate identity number, name of the company, address of the registered company, email address, date of beginning of the reporting, date of ending reporting, date of beginning of the previous year, date of end of previous year, level of rounding up, whether accounting standards are applicable to the company or not. I have hidden the deleted the company's actual name for code of conduct. Whether cost auditor's report has been qualified or not, no or yes. Consolidated qualification absorption, consolidated observation, please refer to audit report. Whether company has related party transaction, yes or no. This is the details of company as a whole, company's details. Now come to the A2 part. A2 means para A part 2. Here the details of cost accountant, cost auditor should be given. Whether the cost auditor is a lead cost auditor. Now one question is there, what is lead cost auditor? Where the company is divided into different branches, they may appoint cost auditor for each branches, and finally they appoint a lead cost auditor who is sitting in the headquarters and consolidated the branch auditor's report, and finally put up to board, and that report is to be filed by the company under CRA for company as a whole. So lead cost auditor means who is consolidating the branch auditor's report and who is leading the entire audit procedures. He is called lead auditor or principal auditor. Now here auditors, whether the cost auditor is lead auditor, in case of branch auditor he will write no. In case of company auditor he will write yes. Category of auditor: fund, proprietorship fund and LLP. Company cannot be a cost auditor. No, in chartered accountant, cost accounting, company secretary, company cannot be a registered under 3 acts. Name of the cost auditor firm, PAN number of cost auditor, address of cost auditor and cost auditor's firm, email ID of cost auditor and cost auditor's firm, membership number of the firm, the person. One thing must be kept in mind, that entire responsibility of the audit report lies on the person who is signing the report, not the firm. Firm may address check, but primary responsibility is the auditor who is signing the report. That's why each and every detail of the auditor signing the report to be mentioned here. SRN number of audit committee meeting invited, attended, and number of audit committee meeting attended, place of signing of the report and date. These are the details of the cost auditor. Now A3 is the company's cost accounting policy. What are the points under company's cost accounting policy? First, briefly introduction, describe the cost accounting policy adopted. Identification, second point, identification of cost center, cost object and cost driver. Third point is accounting of material cost, including packing material, stores, spares, employee cost, utilities and other relevant cost component. Accounting of allocation and absorption of overhead. What is the method? These are the policy, how the company will treat all these items. That is to be written, but the policy cannot violate the cost accounting standards and CRA 1. I am telling you one example, that a big public sector undertaking, I have qualified the report because their cost accounting policy is not as per cost accounting standard. In some cases they deviate from the cost accounting standard and cost CRA 1. Most unfortunately, the cost accounting standard has been prepared by the MARF of our institute. That is a very pity affair. I told the person who has prepared the report to the institute that what you have done. Don't you think that before signing the policy prepared by the company, vetting go through it? All a rubbish thing you are incorporating in the report. And the matter has been referred and discussed at the board of directors meeting, and it has been decided that the company should refer to the institute again on the basis of my observation, and it is lying in the institute table as on today. Just recent incident for cost audit of financial year 23-24. I will not mention the name of the company, but I have done it. And in many cases, one of the company, I have complained against the serious complaint against one of the company, textile company. I am very strict in my duties, and I also expect and request you, whenever you go to practice or employment, do justice to your duties. Otherwise, and do maintain the professional dignity, professional ethics. Otherwise, nobody will give you any importance, or you will not satisfied yourself. At the day end, I sleep sound sleep, because I don't have any tension in my mind that whether I have signed a wrong report, or I have given a wrong statement. Not like that. Be prudent, be informed, be regularly touch in the updates, so that you can be a complete professional. Third point is accounting of byproduct, basis of inventory valuation, methodology of valuation of inter-unit or inter-company transfer, treatment of abnormal non-recurring cost, other relevant cost accounting, and observation of cost auditors regarding adequacy or otherwise of budgetary control system, etc. These are the points. মানে company should formulate policy on this point. This is the suggestive point by the MCA as per company's cost record and audit rules, but you can add much more thing also. Nobody will keep you stop, because this is the broader outline. You can go into deep. If you go in deep, if a company elaborate its cost accounting policy, it will be easier to keep the records correctly. A4. Now, A4 means para A part 4. Here, this annexure should be prepared from the profit and loss of the company. Now, what is the elements? What is the name of the product? Whether you have to quote the CTA code. For distribution of power distribution company, no CTA code has been allowed. So it is written here not applicable. Whether covered under cost audit, yes or no? Yes. Now this is current year figure or previous year figure. Now you will tell from where it has been come. This annexure should be, rather must be prepared from audited profit and loss account. I am opening the company's relevant profit and loss account, and I'll show from where this figure has been coming. Yes. This is the company's account, profit and loss account. You see, this is the revenue from operation 22,99,440.34. It is in lakhs. 22,99,440.34. And what is written here? What is written here? 22,27,000. Sorry. 22,27,355. Now, question may come from where it has been come. This includes income from other operative income. We have to go for Schedule 21. You can see this income is 22,99,440.34. Other operating income is 72084.70, and here you will see 2299 440.33, and here also you will see 29,990 440.34. This amount includes other operating income, but in costing annexure we have to segregate net operating income and other operating income. Now you will tell that from where I got this figure. It is as per the schedule. Where is the schedule? 21. कहाँ रखा है? Yes, revenue. This is revenue for rendering service. Total revenue from other operating income. You can add this and it will come 72,084.70. These three items. You have to go through the details of the schedule also. Other operating income is here. 2299 440.34. So we have segregated this one and it is matching with the total operating income from this. This is other income from company. Other income from company. This is other income 66,325.56. 66,325.56. Total revenue from as per financial accounts. Exceptional and extraordinary item. It is also from here. Exceptional item. This is minus figure 2175.18. 21 minus 2175.18. This is other comprehensive income. This is also coming from here. Other 24708.78. 24708.78 negative figure. Now this is the total revenue as per profit and loss account, taking into this confusion the profit and loss figure. And previous year figure is coming exactly from that profit and loss account. If in any cost audit report, previous year figure don't take from cost audit report, because of very frequently audited account the previous year figure regrouped. So the best way is to take the figure previous year figure from the current year profit and loss or balance sheet itself. So now I think I can be able to give you understanding the how to prepare A4. This is a very vital point. It has no relevance with your groupings as financial code grouping, apportionment and non-cost item, income not considered, expenditure not considered. This is simply a replica of profit and loss account. Now tell me, have you gone through the understood? Is there any question about this annexure?
No, sir.
No. Any other? Siley, is there any question from your point?
No, sir.
No. Clearly understood? Okay.
Yes, sir.
Okay. Now I have to go. This one A4. B1, B2, B3 is not relevant for service unit distribution case. I am going for C1. From C1, this is a quantity difference, quantitative difference, and for quantitative difference, you should depend on the company record. For distribution company, for any power company, there is an energy audit. And energy audit report, from energy audit report, you can take the figure. In coal industry, Form H is there. In other industries, some reporting standards are applicable. You have to take the figure, quantitative figure from that one. I am showing where from this figure has come. This is installed capacity RA wise. Where from this is come? D12. That means last year closing total available capacity is the opening of this year. You see, current year, previous year. And capacity enhanced during the year, all the figures. This is the RAO-wise details. This is a consolidated figure, company as a whole. Take the example of one figure, E final data, quantitative info G37. G37. This is the figure for A 135,923.75. 135,923.75. This is the installed capacity enhanced during the year. Company has prepared this data. I have nothing to do. Whatever the data they have certified, this is there. It is there. So for quantitative details, you have to collect from the data from company. Signed data, obviously signed data. Now, this is the installed capacity opening during the year. This is the enhancement, total installed capacity, this one. And this is the actual service. That means what electricity distributed throughout the year. That is the production. In manufacturing case, it is the production. 4,39,033. Where from it is coming? It is coming RAO-wise J. This is the gross power distributed. This one. A means 26,589.27. 26,589.27. So like this is the available capacity, total available capacity. This is actual production, and this is a capital capacity utilization. You can see capacity utilization is only 25.00. And this is the other quantitative adjustment. That means distribution loss. In this case, this is the distribution loss. And service of the domestic, how this is a sale. So after adjustment of distribution loss, total available quantity for sale 3,84,499 and actual sale 3,84,499. This is the way of presenting the quantitative details as per annexure C1, or in case of manufacturing unit, it is B1. Tell me Is there any problem here? Is there any question from anybody? So everybody is kept mum. I don't know whether you are understood not, because all everybody's camera is off. Please put on your camera. I will see your face. Please put on your camera. I will see your face so that I can understand that you are listening, or you are grabbing the core concept of the in our profession. Can't you open your camera? Huh? Huh? Manjat, yes, Abhiraj, Isika, put on your camera. This is Rimi Singh, my assistant. She is in the Benaras and coordinating whole classes. Today I little bit late in joining. He is ringing my telephone in all the phones. She is so dedicated. I must appreciate her. She is really good. No problem. Starting from arranging, making flyer, everything. And Saili, can't I see your face? I should have the privilege to see your
Sir,
face.
sir, my video is like disabled. I am unable to open the camera.
Okay. Anyway, now, right now, then you are listening. Now I understood that you are listening, not sleeping. Okay. Carry on in the next part. Now this one and that, C2 I have already discussed. Here you can see the ये मेरे को दिख नहीं रहा है तो इन लोग को कैसे दिखेगा. Direct employee cost. You see from where it has come? It has come from the lower part. You see the direct employee cost of A, J, the service RAO J. We can see it from here also. J. What is J? This one. Direct employee cost of J. What is the figure? 9654.70. What is written here? 9654.70. So now you understand that these figures just go to the different RAO headwise, nothing else. From this one, figure has to be taken in there, just linking the file, linking the cell. So this is the basic structure, working sheet for preparing C2, that is preparation of average cost statement. This one. What are in distribution there is no material and utility, direct employee cost, direct expenses cost, consumable stores and spares, repairs and maintenance. This is ekdam standard format of the as per CRA, as per company's cost record and audit rules. So you can't change. You have to group the financial data, financial code or SAP code according to these headings. You have to choose, and for selecting, mapping the financial code or SAP code into the headings, you have to take the help of cost accounting standard and CRA1, cost accounting principles, generally accepted cost accounting principle and cost accounting policy. These are the ways of grouping of financial code or SAP code into the different heads of our average cost statement. Now you can understood the importance of cost accounting policy, the importance of cost accounting standard, the importance of CRA1, which I have discussed yesterday. So before going to prepare the cost records, you have to read very carefully the company's cost accounting policy, and CRA1 is your subject. You have to know CRA1 thoroughly, word to word. You have to know the different cost accounting standards and the guideline issued by a company. I will show that one also as on today after finishing this one. How to fill up the annex chart, that there is a guidelines by the institute. I will show you that one also, and I will share this one also in the group. I prepared this statement, this annexures for distributing in the group, but I am afraid that you cannot be able to link. I without the I have to share 3 files. This one, and this one. Then only, and this one. Then only you can understood the total scenario, how the figures are coming and going. Now this is the average cost statement, and after that what it depicts the cost margin company as a whole, because this is the company as a whole figure after consolidating the RAO-wise figure. This is the company wise as a figure, and you will see this figure is matching with this figure 9206.99. Here for control purpose we are preparing the reconciliation, but elaborate reconciliation is in the main annexure. Okay, till now I think it is clear to you. Now I am coming this one, as there is no utility and these annexures are kept blank because there is no material, utility or direct industry specific expenses. Now D1, what does it? D1 is the product and service profitability, para D part 1, product and service profitability statement. Where from this one sales, it should come from C2 RAO-wise. C2, you see sales. What is the sales figure? 2316593.96. 2316593.16. If you prepare this annexure, this annexure will automatically, this is linking. It is the format has been designed, the system, entire cost account record keeping system has been designed by myself when I was in Coal India in the year 2012, when nobody knows how to implement the cost audit, cost records in the coal industry. I took the lead entire coal industry and prepared these groupings and taught the entire all the subsidiaries head and latter part all the companies, and I am maintaining that format for my work. Whenever I go for audit, I require data in this format. So this is automatically done. You see there is a formula. Cost of sales 2325800.96. Cost of sales 2325800.96. margin minus 9207.00. Sorry, 9207.00 minus. So this is automatically prepared, whether it is a production मैन्युफैक्चरिंग यूनिट और सर्विस यूनिट. फॉर्मूला लगा हुआ है यहाँ पे भी देखो, यहाँ फॉर्मूला इज देयर. ऑटोमेटिकली फिगर विल फेच हियर. नाउ I am coming to the D2 part. This is the most vital part. In D2 means para D part 2. Where from, what does it mean? It is a profit reconciliation. That means profit or margin as per cost record, reconciliation with the audited profit and loss account. Audited profit and loss account means PBT, profit before tax. Keep in mind, not PAT, PBT, profit before tax. Now this is 9200.07 and 1001. It is here, it is coming from here, 9200. This is the starting point in D2. Now we are total income 13417.04, which we have not considered. Where from it is coming? It is coming from different you see, expenditure not considered. What is the total? 10565678.68. Here it is. Achha, sorry, and income not considered. 13417.04. One three four one seven zero 4056.87, and exactly this figure is coming here. It is in lakhs, that is in full figure. So it is linked from that file, and in this way expenses not considered in the accounts 105.66, 105.66. So this one is your reconciliation D2. Now you understood how this reconciliation is this, and this is PBT as per profit and loss account. I will show it again. What is PBT? Profit before 4104.38, 4104.39. Four one zero four point three eight three nine point 0.1 is meaningless. That much we can accept. So this is the preparation of D2. This reconciliation is coming from your profit and loss account, your cost records, what you have been prepared. That is C2 and D2 is the main thing. You have to work hard. Other is coming from profit and loss and balance sheet. Just figure is to be kept. But C2, preparation of C2 is tough, grouping of financial codes, and after that segregation of income not considered, expenditure not considered, that has to be again grouping in the different board heads, because all the finance SAP code should not be taken here. It should be grouped like this: rent from outsider, interest on loan on to employees, interest on loan and advance from outside, interest received. These are all purely income which are financial nature, should be excluded from income. And this is the bad debts, other financial provision, abnormal loss, write-off, loss of sales of assets, loss on sale of stores and spares, donation grant. These are all finance. Abnormal loss, write-off are part of the purview of cost record. And any financial expenditure, purely financial expenditure, should be provision, financial provision should be kept outside of the purview of cost record. So it should be taken here in the reconciliation. RECO items. We are calling this item are RECO items. So I think up to this point it is clear to you. If there is any point for anybody, please tell me. Is there any point or any question?
Okay.
Aviraj?
No, sir, no. In
Manjot?
reconciliation, no.
Manjot?
No doubt, sir.
No doubt. Saili? No doubt.
No, sir.
Tale, you must appreciate that I am able to convince you. And I don't think that I am a so bad teacher not to convince anybody. I am trying my level best to give you upliftment. And if you understood the whole scenario, whole things, I will be most happy that my efforts has put some result. Otherwise, it is of no use. Whatever efforts I have given and whatever things I have done, it is meaningless until and unless you understood the whole scenario. Now, just wait a minute. Now, we have to go for D3. D3 is a value addition. It is also to be prepared company as a whole, not RAO wise or not branch wise. What is this value addition? What does it mean, value addition? Can anybody tell what does it mean by value addition? Abhiraj? What is the meaning of value addition? Is there anybody who can tell the meaning of value addition in finance? Nobody can tell. You are intermediate cost accountant, you are a professional student, you don't know what is value addition. Value addition means when a product comes to you and you increase its durability or increase your shining or increase your efficiency or increase your potentiality, something you have add so that the product or service can be better than other from what you have received. Similarly, in the case of our costing terminology, value addition means what the value company added through his product or services. Value addition to the nation. And frankly speaking, in financial accounts also, audited accounts you will see the value addition, and here also you will see value addition, but both the value addition computation is something different. Both are not equal, but it is as per our guidelines, that is as per their guidelines. So I am coming here in the value addition. In value addition, this format also has been standard in the your CRA company's cost record and audit rules. This comes revenue from operation. This should match with this one, A4 figure. 22,994, this is value total operating income. And this is total of all bought out material, cost of material, others, other expenditure. It should be come from the profit and loss account. You will see if you see the profit and loss account, cost of power 1965,608. And others figure, how can I derive others figure? Others figures are coming from calculation. Other bought out materials, bought out things. Cost of bought out inputs. Bought out means for which you have paid. So this is total bought out inputs. That means starting from revenue from operation, you have total revenue this one, and you have expended for coming to this stage this one. So what value you have added? This one. This minus this. Now add income from other sources, exceptional income. This is earning for distribution. That means this is the total earnings of the company to be distributed like this. Keep in mind, employee cost is not here, because for company, employee is also a stakeholder. Now, how this earnings has been distributed for employee, that is the employee cost, shareholders dividend, company's retained fund, and like this. These have come from profit and loss and balance sheet. And you see, this is 224,614, this is 224,614. These two must be equal, total earnings and total distribution. And there is other formula also. I can show you how it has been prepared. See, this one has been prepared separately, because same figure has been kept there. In other figures, other figure has come? Here is the schedule. Other expenses. This one, finance cost, other expenses include not only other expenses, but also finance cost there. Other expenses 52514.28. Other expenses 52514.28. as per profit and loss account, and finance cost is 96,145. These two figure comes here in the other expenses and finance cost, and goes here other expenses. This one, it has come from that figure. Now income from others. Similarly, government taxes and retained earning has to be calculated in this figure. Also, we have calculated current year tax, nothing, 0, as there is a loss, no tax. Other distribution, nothing. Profit and loss, this one, and this is depreciation. Non-cash cost is a fund earning, because non-cash cost is not a come under the brought out expenses. Cash is not, it is a non-cash cost. So it should be added in the retained earning. It is kept within the company. So this figure is coming from here. Now D3 is clearly understood by you or not? Tell me. Is there any problem or is there any question? Any item in for any item? So shall I proceed?
Yes, sir.
Okay. Now D4. What is D4? D4 is a ratio analysis. You can see this figure has come from our balance sheet and profit and loss. Share capital, reserves and surplus, long-term capital borrowing. These are come from share capital. All coming from long-term capital, gross fixed asset, net fixed asset, current fixed asset, less current. If you compare with the profit and loss account and balance sheet, you will find that this is a value addition come from D3. Net revenue from operation come from A4. Profit before tax from audited accounts, profit and loss account. Now you have to calculate the different ratios. PBT to capital employed, PBT to net worth. Capital employed should be computed like this. Here I have to mention the capital employed figure. For capital employed figure, you have to calculate the average net fixed assets and average net current asset. Average. Here average cost is there. Computation of capital, calculation of average capital employed, calculation of net fixed asset, and net average means 2 years opening and beginning divided by 2. Opening plus closing divided by 2. Now you have to asset. This is the total calculation sheet. You have to calculate for capital employed. Now it is automatically formula has given, nothing has to be done. PBT, profit before tax to capital employed, profit before tax to net worth, profit before tax to value addition, profit before tax to net worth, like this. Debt equity ratio, current asset to current liability, that is current ratio, value addition to net revenue, raw material ratio, stores pair. These are the ratios, these are formula format given in the company's cost record and audit rules. Now this is related party transaction annexure. It has to be the replica of what has been depicted in the audited accounts. You will get this item from audited accounts. And D6, Here D6 means what is the outward taxable liability, what is taxable liability, zero rated, nil rated, it have to be given separately, and outward supply, total duties and taxes, and you have to GST, SST and IST. This is a taxable value and this is the tax payable. This is the tax payable, duties and tax payable, this one, and input tax credit minus you have paid payment through cash ledger, duties and taxes paid, this one, and balance is zero, difference is zero. So this figure should be come from GSTR 1 and GSTR 3. Most, that means annual return of GST. So this is the total audit annexures to cost audit report. You have to prepare. I am giving you step by step guide and explain each and every item. If there is any doubt by anybody, please tell me. I will again explain it. No matter what a silly question is that. Rimi, feedback form दे दिया?
Yes, sir.
Okay. All are requested to fill up the feedback form. And don't write same comment each day. Just value the day performance of myself and give free and frank comment. I have to, I am seeing every day your comments and correct myself as per your comments if required. Now, this is the preparation of cost accounting records and annexure, how to fill it for audit, presenting before auditor. What are the intricacies? Only one thing is left, two things is left, that is cost auditing standard. There is a vast, at least 3-4 days to take that class, and cost accounting standard not less than 15 days. 24 and one is coming 25, not less than 15 days should take that aspect. That is a big chapter, and I will promise you I will take the classes and inform all of you through the group and through mail also, so that you can know the cost accounting standard and cost auditing standard will be there. But that will be boring subject. This is too much, little bit some figure, but that will be no figure, only bhashan, only lecture, and you have to grab the concept of the cost accounting standard and cost auditing standard. Otherwise, you can't be a full-fledged cost accountant, cost and management accountant. You can't survive. If you are not in a costing profession, costing profile, or you are simply a clerk or simply a officer who is passing the bill, costing, these are useless for you. But if you want to be establish yourself as a cost and manager, true cost and management professional, you should know all these things. So yes, tomorrow I will completely focus on cost audit. Now you have learned how to prepare the cost records from the table one side. Yesterday, tomorrow I will let you learn, let you know how to get the things audited, how to cash hold the figures, how to pinpoint the fault, mistakes, what are to be seen for conducting the audit, what will be the audit program, what you have to see, what you have to consider to form your opinion, that I'll all discuss in the last day. Tomorrow is the last day, and I hope I have justice to my duties. What I promised in the LinkedIn that I will take these classes, and I fulfill my obligation. Now it is up to you how to use this, and I will share all these files. Once I will check whether there is any name or not, and share also the video also, and 3 videos, today's videos, yesterday's videos, and tomorrow's videos will be uploaded on Tuesday or Wednesday in the group, in the YouTube, and also you will be informed through group.